All right, guys, welcome. Welcome, everybody. All right, guys, welcome, everyone. All right, guys, welcome. Now, you're always going to hear myself saying stuff. I mean, it's getting good. Welcome people all the time when we got the session going. Let's get ourselves in. All right. So I'm keeping the same schematic. I'm going to start in like a 20 seconds or so. Just trying to make sure that the feed is stable, everybody's in, then I'm going to crack on. I'll take it from there. So, okay. Well, let's begin then. I've given everyone enough time. Let's crack on. So this is the schematic diagram I have so far for where we currently are with the dollar index. All right. So we have the price returning to this H4 order block here, supply order block. So far, since we had this movement here, we had a push up in price. This demand push here, it's good to observe how liquidity flows in the market in this aspect as well. So if we look at what will happen with the price here, so I'm going to draw the demand zone, which is the precursor area before the price got into this order block right here. So with this order block here, this is an intermediate order block because it's not the beginning of a reversal, it's a continuation of a trend. So the order block is different in how it behaves from a reversal one. Okay, so essentially here, let's look at what the price has done. So price has gone long from here. We had that first push, the swing high got into this order block. We had an immediate reaction on the next H4 candle, massive short. Now, when the price went long again, it stopped over here at this swing low here. And that's another topic for another day where I stopped right there. The academy, we call that hidden HVP or HVP for short. Okay. The price, now markets will always come back to use prices as reference points. So what the market's done here is use this swing low as a reference point for bearishness, and you can see the prices continue lower. Now, observe carefully, this second candle here has taken out these two lows on the H4 here, 1 and 2, but that doesn't necessarily mean the price is going to go for a long again, since it's taken the lows to trigger some sort of reversal. But at least those lows have been taken out, which is important. Now, I like my lines to be straight, so I always put the effort in to make sure I get it straight. Here we go, much better. Anyway, so now that we have that, let's look at this H4 demand zone. So first of all, the first thing to observe is that the length of this candle, now every pip the market moves costs money. Or on average, I believe is about $50 million for every pip. So every 10 micro pips. All right. So if we're measuring how much money is on the buy side and on the sell side in terms of liquidity, not volume, per se, the bearish side is much stronger because if the price was going to continue to go long, then we should have seen a bullish candle that should have at least matched this high or gone above it, but we didn't get that. And now the price has come back down and filled the whole length of this candle. And we have a bit of an accumulation here inside of this order block. What that means to me is that the demand side of the market is getting weaker now. Sorry, my alarm just went off for a trade. Just give me a second to work out what that's going to be. I think that's NZD-USD. Hold on. What I wanted to see with NZD-USD has happened. So let me switch off my alarm, guys. Apologize for that. Turn off the alarm. Let's take a look. I just had something marked out for NZD-USD that I wanted to see, and it's happening. So I'm observing. I'm not reacting yet, though. Just observing. Anyway, so coming back to the charts here. So with the dollar index at the moment, the order price is hovering inside of this order block. Now it hasn't closed beneath the middle point of this order block. If it starts to close beneath the medium and start to get down here and below, then it should be crashing down to get down here, which is what the target is. Now, there isn't any high impact US dollar news today, but there is high impact US dollar news tomorrow. We have the FOMC minutes at 7 o'clock, which definitely could cause some sort of effect on the price, right? Now, my targets are pretty simple. After this induction here, we've had the break of market structure. Now, I didn't write out the break of market structure, but it is over here or right here. So I will put this in. Now, for those of you who are not familiar with my writing, market structure break is what I use. All right. But you can use BOS if you want. I think that's the more popular one that people do use, which is well understood. All right. So now that the price is in this stage, what does this mean for the dollar? Now, what I do want to see in the meantime is that we're going to have a weaker dollar before we get a stronger dollar. Obviously, the third scenario out of these two is if the price closes beneath the low of this week here, then we have an extended bullish leg to go on the dollar before we have any longs going on. So with that in mind, I'm watching carefully to see how the market is going to behave going forward. Now, even on the H4 here, you can see we have another fair value gap here, which we would call the H4 validation point. The price has filled that out pretty nicely and is continuing to go down for a short. So I believe we're most likely going to break outside of this order block, especially because there's no activity. After, these movements that have come into the order block, you can see that the order flow is becoming bearish. I'll explain to you why. If I take the length of this high or from this high to the next highest point that was formed here, now I'm going through the candle. This is not a trend line. The order flow is bearish from this order block. There are less people buying and more people starting to sell out of this order block price range here. Okay. So of the belief that the price is going to sell, it looks as though the market is going to do one of those moves where it just breaks down pretty quickly and takes the lows and then continues going. And that's what I'd like to see. So in translation for me and for you, what does that mean for us? Now, depending on this week, because today is Tuesday, we still have 3 days until the NFP results. And Thursday, we have the precursor to the NFP results, in my opinion, which is the ADP news. Now, I don't really actually look at the news figures anymore. I stopped doing that a few years ago because the markets are highly manipulated and the figures are just sometimes as a confirmation and sometimes to add more confusion to the pool. Is there for a whole number of reasons, but either way you put it, the news is lagging compared to technical action. What they want to do in the market, the price points they want to go to, they've already pre-planned it a long time ago. Or I should say the aggregate of the market has already pre-planned it. So if we look at the price action beforehand, we can get a very good idea if we study well where the price is going to go before any news release. Even most likely where spikes could potentially happen because, if there are inefficiencies or fair value gaps or equal highs, equal lows, or relative equal highs and lows, whatever kind of inefficiency or inadequacy there is in the price, that hasn't been addressed before the news might be addressed with the news. And that's just usually how the price goes in price delivery cycles anyway. All right, so that means looking at the rest of the pairs, what should we do? Now, if the dollar is going to lose strength, that means that something like Euro USD should be going long. Now, already we've had this initial movement here, which was absolutely brilliant. Coming into Monday, though, so yesterday. Now, I know the market actually opens like Sunday, 10 o'clock in the UK, but I just that first 2 hours is not really something that I consider as the market. I think that's just kind of like, when you first wake up situation from sleep. That's how I see those first 2 hours before the new day. But anyway, we had this movement here. Price is taking a high of the previous day. And now it's pushing back down here for a short. If it does come back down here, it's holding inside of this supply zone that's become a demand order block. If it drops lower, that would be great to see because there is a bit of off correlation anyway with pairs. And I explain what I mean. So pound USD at the moment is pushing long, whilst Euro USD is clearly pushing short in the same period of time. So there's a bit of off correlation. The US dollar is not the only thing or the only driving factor behind the major currencies. And when it's off correlated like that, I personally don't like to also trade the majors when it's like that, unless there's a very good opportunity. I don't want to do that because right now we're operating on off correlation grounds, basically. So I'm trying to be like smart with the price action that I take and look at, during the period of time, and not just go for anything I see or seeing sake, because that could always end up being a bad idea. Okay, so that's basically what my view is anyway. But since we're in off correlation territory, I don't really want to be trading uh the pairs yet. I think maybe the news on Wednesday might balance everything out. But for now, no. All right, moving on to gold here. The high of gold of yesterday is in sight for the price. The market's kind of been hovering around it today, but hasn't really touched the high at all. Hasn't really made headway. And there's some more highs to go along here, quite a few along the way that gold can go for. Now, my thing is that gold may actually give us a second chance to get in. I'm going to have to change this rectangle because it's just absolutely terrible. Can't see anything. We have one order block down here that the price has formed with a liquidity void afterwards, no feeling of that. And then we have a second one that the market has made recently over here. So there's a couple of options for us. If the market takes the high of yesterday and there's a reaction that can produce a reversal here, so I'm going to put this out here. Then what we may find if the price was to do this kind of movement, we'll know very soon if it will, is to give us something of this sort. Now, because I just said the dollar is going for a short and then a long, if that's the case and it does do that, then that means gold should be going long anyway. But that wouldn't stop gold from going short before or long. But, the overall direction would be bullish because the dollar will be losing strength, but not forever anyway. So I'm watching this high to see how the price interacts. If we have a strong body close, H1 bodies, a couple of them closing above this high, then we should be looking for a continuation somewhere in this range. If not, then we may be lucky to get this movement happening here. Even if the price is going to come back down to this order block here, but this one, we may get that chance to go for the long and ride the wave back up here, okay, to further targets. Really, this is one scenario that the price could do in terms of reversal scenarios if the market was to do so. All right. Now, I'm just going to scroll this down a bit here. The last fair value gap, which is where my target is before I take gold for a major sell, is around $2,000. There's a very obvious fair value gap between this candle here, the low of this candle, and this range right here. There's a fair value gap in this range of 14 or 100, okay, 150 pips basically. All right. So there's a gap, there's a range here that the price needs to get to, which is why I'm vying for gold to go for long. And that's why I was going for gold in the first place. No, literally no pun intended. I was actually going for gold. How I'll say is that there's a few more than two options here, because even over here, these relative equal highs, they look like equal highs, but they're not exactly equal. But they're relative. The weekly high is not too far away from this daily high right here. So the market may stretch a bit more and take this weekly high before pulling back a little bit, because there'll be liquidity and buy stops above there, right? The market can go for and then pull back. So with gold, the opportunities to get into trades are pretty plenteous. And I do expect gold to really give us a very strong long, kind of like the last push before we go for a short. This is what my idea is when it comes to looking at gold. But for now, I'm not going to react because nothing has actually happened yet. So there'll be nothing that we can really do with what the price is saying to us. All right. Now, EuroCAD is starting to push down quite a bit and it's decided to leave these highs here, which is interesting. But you can see it's coming back down to where I'm looking at. As I said, with EuroCAD, I'm expecting the price to take this low and get in here, and then we'll be shooting up for a long pretty soon. Okay, which is similar to what I'm looking for USD CAD, because USD CAD has taken and now I've got the market still left behind. Price has taken the low of the previous week into this order block, like we said, when I was selling USD CAD when I was on the live maybe 3 weeks ago, I was expecting the price to run all of these lows, which is done perfectly. Now on the H4, we've broken market structure here as I marked out. And now I'm expecting to come back to the order block for a long. Now, like I was telling my academy students today, I will say this to you guys that I'm a little bit suspicious about this low because on IC Markets, which is the main broker that I do use for my personal account trading, these M15 lows here, or the low of the induction, the lows are equal, right? Now it looks like on Hugo's way, the lows are, I believe, the same. So low number one is 1.31165. And this is also 1.31165. On IC Markets is 168, but it's still 1.31. So 1.31168 on one side, and on the other side, we've got 13165. So my thing is that even though I know the price would want to come back in this order block, I don't trust the price completely now. My thing is that I'm going to trade what I see. When the price gets into this order block, I'll take a long stop loss maybe beneath here and let it go. If it decides to ignore those order equal lows and not continue going short, then that's great. But if it does, then I'm expecting the market to take these equal lows first and then create a new weekly induction for us to go for a long. All right. So this is something that I wanted to kind of give you guys a heads up about, what I'm looking at when it comes to the price action here, because clearly the market is in a very interesting state right now. And so this is why I want to kind of prepare you guys beforehand so that if you want to jump into any of these pairs, you don't just jump in haphazardly and get yourself into some issues, right? So this is why I wanted to go through that. So these are really my setups. Now my thing is that with Euro CAD and USD CAD, they seem to be what's the word I'm looking for? They seem to be correlated pretty well, all right? And the H1 area that we're looking at, which is, I'm going to pull this out here. This is the H1 area. The H1 area that I'm looking at over here, let's drag this along. The H1 area that you see me looking at over here, which is where my target is to go for a buy trade, the price is moving in pretty good sync with Euro USD CAD as well. If I go to USD CAD, the USD CAD is doing the same kind of pullback right now. It's taking this low here, starting to pull back a little bit. Euro CAD hasn't taken a low per se, but it's pulling back in the same kind of manner. So it's pretty much great correlation in terms of movement. They're really moving the same way, which is not always the case. So my thing is that I won't take USD CAD personally, and you can do the same thing. I probably put an alarm at this low so that I know that the time has come. But I'm not going to take Euro CAD, or I'm not going to take USD CAD for a long until Euro CAD gives me an entry down here. When Euro CAD gets into this area, wherever USD CAD finds itself, which probably we'll know, I don't know for sure where it is. Wherever it lands, I'm going to be getting in right there for USD CAD too at this moment. Because remember, time and price are both factors that control the price. So when you're looking at time-based price, there is always going to be a timing. I think when the market is doing what it's doing, it's actually just trying to find time and then a price point to be able to, do something, do a movement, especially a major one. So this is why I'm looking to get into the pair that I told you I'm getting into, which is Euro CAD and USD CAD. And I just want to see what the market is going to offer us. All right. So that's really my setups really going forward. I've laid out the schematic for you, so you guys have ample room to be able to have a look at what's going on. But all I'm doing now is just watching the dollar index with a pinch of salt, which you should be doing too. Okay. So